On Tuesday, the US stock market saw how steep a roller coaster ride could be. The speech by Fed Chair Jerome Powell sparked sharp volatility in the market and confused both optimists and pessimists. The middle of this trading week looks less volatile, but is still full of different events. InstaForex analysts are ready to share their ideas about the main market drivers. You are watching a fresh review of the US trading session. Tuesday was a controversial day for Wall Street as the stock indexes were trading mixed and with sharp movements. The benchmark indexes closed the day in a positive territory. The Dow Jones advanced by 265 points or 0.78%. The Nasdaq Tech Index gained 1.9%, while the S&P 500 added 1.29% to close the session at 4,164. On Wednesday, the market euphoria calmed down and stock indexes began to decline. As a result, Wall Street opened pre-market trade in the red zone. Key indexes lost 0.3%, and the S&P 500 is expected to trade in the channel between 4,110 and 4,210 points. The rally in the US stock market developed amid Jerome Powell's reaction to the recent jobs report. The Fed president refrained from ultra-hawkish comments about the future tightening of the monetary policy. Powell expressed hopes that in 2023 the United States will witness significantly lower inflation. Commenting on the employment data released last Friday, Powell admitted that they didn't expect it to be this strong. He also added that this data explains why the Fed thinks taming inflation will take longer than expected. Despite some aggressive comments by his colleagues, Jerome Powell noted that this tightening cycle differs from the previous ones, which makes it impossible to predict the reaction of different sectors of the economy. Moreover, the head of the regulator warned that the interest rates may be lifted higher than planned if the US economy stays strong. Yet, he confirmed that the disinflationary process has begun. Following Powell's comments, Morgan Stanley added 25 basis points to its forecast for the Fed's policy meeting in May, but continued to expect the first 25 basis point rate cut for December 2023. As for the corporate sector, Bed Bath & Beyond shares dropped by almost 50% as the retailer tried to raise more than $1 billion in an attempt to avoid bankruptcy. Among the Dow Jones Industrial Average components, Boeing shares gained 3.84% as the aircraft producer confirmed it was going to cut about 2,000 white-collar jobs. US-listed shares of Baidu Incorporated soared by 12% as the Chinese search engine said it would conclude testing on its ChatGPT-style project Ernie-bot in March. Most S&P 500 sectors closed higher. Energy was the biggest increasing sector in the S&P 500 on the back of 3% gains in oil prices. Technology and the communication services were among the leading sectors as well. In the pre-market trading hours on Wednesday, investors switched to the wait-and-see mode again. The market is now trying to mull not only Chair Powell's speech, but also President Biden's State of the Union address. On a Tuesday, Biden criticized corporations for cashing in on the pandemic. He also called for a minimum billionaire tax and a 4% tax on corporate stock buybacks. The president was particularly critical of oil companies. As a reminder, some of them, particularly British Petroleum, Shell, ExxonMobil, and Chevron, announced record profits in 2023. Microsoft said it would overhaul its Bing search engine and Edge web browser with artificial intelligence. Consequently, its share price advanced by 1.7%. Disney, Fox Corporated, and Uber are expected to deliver their earnings reports today as well. Along with the corporate results, traders will have to mull today's speeches of some Fed officials, including John Williams, Raphael Bostic, Neil Kashkari, Lisa Ku, Christopher Waller, and Michael Barr. Forex traders seem to have taken Jerome Powell's speech as a bearish signal. The US dollar index pulled back, losing 0.3% intraday, and approached the level of 103.10. The index is seen moving in the 102.90 and 103.50 range. On a Wednesday, the greenback showed weakness on the less hawkish comments from Powell. As a result, USDX dropped 203 points from a monthly high of 103.96. The dollar's short-term rally, triggered by Friday's upbeat labor market report, ended after Powell's remarks. Markets are now expecting the Fed funds rate to peak just above 5.1% by June, from a range of 4.5% to 4.75% currently. After Powell's comments, traders again shifted their focus to macro data. In addition to Thursday's jobless claims figures, they will also be waiting the CPI report due to next Tuesday. Until then, USDX will remain under pressure from Powell's dovish tone and disinflation expectations. Of course, the Fed's policymakers who are going to deliver speeches today and later this week may provide some support to the dollar. The USD CAD pair remains fairly stable. Before exchanges opened, the quote fell by 0.06% to 1.3390. The pair is now seen trading in the 1.3340 and 1.3440 range. Bank of Canada Governor Tiff Macklem on Tuesday said no further interest rate rises would be needed if new data were broadly in line with the forecast and inflation came down as predicted. Monetary policy is working. Macklem said, adding that economic growth would be close to zero through the third quarter of this year, and he stressed that the regulator needed time to assess how households and businesses were adapting to higher interest rates before it made further moves. On the top of that, the official said that the real estate market could soften further before it stabilizes later this year. However, the Bank of Canada is not planning to ease monetary policy. It's committed to further tightening, and yet the overall tone of Macklem's speech was more dovish. Despite the Bank of Canada governor's dovish comments, the loonie kept rising amid the weakening of the US dollar index and rising oil prices, and the latter has been growing for the third day in a row. Brent crude rose by 0.4% to $84.10 a barrel today, while WTI climbed by 0.6%. The crypto market, which advanced following Jerome Powell's speech yesterday, lost half of its early gains. Bitcoin sank by 0.3% to $23,140. Ethereum, Solana, Ripple and Litecoin traded mixed in the range between -0.7 and plus 0.9%. While the crypto traders are assessing their risks and the chance of a potential bullish reversal, the Bank for International Settlements is working on a mechanism for monitoring stablecoins. The bank is expected to conduct various tests of different stablecoins and their balance sheet in order to reveal preliminary results by the end of the year. The project, called Pixtrial, may help regulators from a data-based policy time frame. It will also give more information about crypto tokens whose value is pegged to other assets. Bitcoin could remain stuck in a narrow range of $22,900 and $23,200 today due to the lack of a crucial news. If the risk appetite declines, BTC could slide to $22,500 and $23,500. There are the main predictions for the American session. We hope you will open only profitable trades. Hit the subscribe button to keep abreast of the latest market news, and see you soon.